Hello, welcome to Marshall Reddick. Thanks for joining us and thanks for your interest in our mortgage fund. My name is Patrick Prunty, Director of Private Lending with Marshall Reddick, and as always, it's a pleasure to be with you. Our main focus over the next 30 minutes is going to be to introduce you to the mortgage fund, the transparency it offers, and we're going to do so through a detailed tour of the fund website that we've set up.
Hi there, Vince Tomich, Realtor, Advisor, and Mortgage Fund Specialist at Marshall Reddick. I'm also with my colleague, Evan.
Hi, everyone. My name is Evan Balsis, Realtor, Advisor, and Investment Specialist with Marshall Reddick Mortgage Fund.
Awesome. So before we dive into the Marshall Reddick Mortgage Fund, I'd like to take a moment to kind of explain who Marshall Reddick is and what we do. So we are a professional real estate firm, and we offer three different resources. One being our services, two being our investments, and three being our education. So for our services, we have our brokerage, which we help people buy and sell, primary or investment properties. We also have our property management division, which services our owners, as well as our private financing division for our folks looking for loans. Our second resource is going to be our investments. So we offer real estate ownership as well as private mortgage lending. And then finally, we have education. So this includes our consultations, our events, our webinars, all of our articles that you can find on our website, all of which are free to you Marshall Reddick clients. And yeah, we're happy to provide all this information to you folks.
Awesome. Thanks, Vince. And taking that a step further, specifically with regard to investments, Marshall Reddick Mortgage Fund is an investment offering. Many of you have already connected with Vince or myself, which is great, but we're here to field questions, communicate with the audience, and also connect with you over the next week or so via telephone or maybe even perhaps Zoom to schedule one-on-one consultations, just to field your questions and make sure those get answered and to help you continue your due diligence.
Awesome, Vince, Evan, thank you guys so much. Looking forward to the presentation, folks, and again, so happy to be with you. Get our screens going. So we've set up this wonderful website, and as I mentioned, we're going to be taking a detailed tour through it. This really is the first place that you should come in order to conduct due diligence and decide if an investment in the mortgage fund is right for you. So we're starting right here at the top, and first I'm going to back up to our homepage so that you know how to get there. You can easily go right over here over invest and click on investment fund. When you do that, you're going to arrive at this page, the page I was just at previously. Okay, now note as we kind of dive in here, we've placed a lot of tooltips for your information, because a lot of folks will have questions about what these graphs and all these numbers mean. So be advised that these tooltips here, you can go ahead and click on these little question marks, and it's going to give you definitions. All right. Well, first and foremost, one of the most questions we get asked is, what is the return I should expect? All right, it's a very valid question. So currently, the fund is returning an annualized 9%, right? And if you math gurus that are out there, we've got that are going to be updated once per quarter, okay? So these two numbers are updated on the first day of every quarter, right? So these are as current as April 1st of this year, 2021. Our capital raise has gone extremely well, and we're substantially higher. We're currently at 12.25 million total. So we've had a very good April and a lot of interest. Moving along to the right then, and discussing like actually the active mortgage investments held by the fund, as well as our default rate. So I mentioned earlier the transparency that we're going to offer, and the bottom line is that this site is set up to simply show exactly what we're doing as a fund, right? What is our return? How much capital do we have? How many mortgages does the fund have, right? What's the historic default rate look like, okay? So currently, with the capital on hand, we have 89 mortgages that are in play, and we have 0 defaults. Certainly, defaults are part of lending money, and any lender that's out there would tell you that eventually you're going to get a default. That's part of doing business. But thus far, right, sticking with our origination of really good, solid first lien position loans, we have a 0 default rate, right? But that number will be kept track of in real time. And so, for example, then hovering over this graph, you can see of the 89 active mortgage investments we have, all 89 of them are current. We have 0 lates, 0 delinquents, and 0 in default. Moving along, down a little bit farther, this is going to be kind of the nuts and bolts of the fund, right? So we've got set up here with several tabs: structure, purpose, strategy, and documents. Okay, so moving to the document section, our private placement memorandum, that's actually our business plan. We've got several other documents here listed, but just know that these are all available for download during your due diligence process. I definitely encourage folks, if you're interested in learning the nuts and bolts, spend a lot of time looking at the structure, purpose, and strategy, right? We set these up so that everybody can get a really good understanding about what the fund is, what the purpose of the fund is, and the strategy that the fund undertakes. So very simply put, for everybody's information, this is a private investment fund. It's a fund managed by Marshall Reddick. It's organized as a California LLC. It's a partnership. All right, so I won't go into too many more of those details, but know that all of this fund information is there for you 24/7. I'm going to jump down and we're going to talk a little bit about the fund managers. Ross Nelson and Scott Pastel, along with myself, these are some of the hardest working folks I know, some of the most professional and some of the most experienced. And the same goes for my colleagues, Evan and Vince, that are joining the call. All of us that work for Marshall Reddick, we've all had very lengthy careers, right? We pour our heart and soul into what we do every day. We're real estate junkies, if you want us to call us that, right? But we love what we do every day, and this investment offering is no different. And I think that the best way to describe that is sort of, put your money where your mouth is. And so when I say that as of April 1st, we had 7.62 million, right? Of that, 1 million of that comes from the principals and the employees of Marshall Reddick. That's roughly, 13%? So that just goes to show you how much we, as the principals and the employees and the staff of Marshall Reddick, believe in Marshall Reddick Mortgage Fund. Diving along a little bit further, I want to then hit back on the transparency offered by the fund, okay? Again, it's a debt fund. It only lends money, right? But what other debt funds are out there that show you actually the mortgages that they invest in? This is a very key point, right? It's like you can actually see the assets held by the fund in real time, what the history has been. And so take some time and play around on this and explore the mortgages. You've got two different options here. You've got active versus active and completed. So the active, again, is going to only show you here how many that we actually are holding in real time. Active and completed gives me a little bit different result. So there's 131. So the 89 through 131, we have 42 mortgages then that have paid off in our short history. And I mentioned that, so we're actually into our 5th operational quarter. So it's new, but the premise and the business model is not new. Marshall Reddick's private lending department and program has been running for more than a decade now. The fund is just aggregating of the capital instead of a one-to-one relationship where previously the lender would select the loan and it's one lender on one loan. We still do the direct lending, but the fund is sort of the new wave of the future, and the ability for Marshall Reddick to be able to scale this private lending program to help more capital partners earn a better and a safer return, as well as for more borrowers to be able to take advantage of our very niche programs that a bank simply cannot offer, a bank or a conventional lender. So again, exploring the mortgages in the fund here, notice that you can play around here and there's a bunch of unique filters that you can use to show you the different types of loan statuses that we have. You can also change the showing of what you have here. And you can do so, for example, by, right now we're sorting by loan amount. So it's going to give you the largest loan amounts down on multiple pages here into smaller loan amounts. But what if I wanted to see, for example, the highest yields to maturity or the lowest yields to maturity, right? You have the ability to toggle that. Now, know too that each one of these loans has a detailed view, right? And that detailed view I'm going to go ahead and show you. When you click on one of these, we'll open in a new tab, a new web tab, right? And this is going to actually show you that detailed view. It's going to show you the type of loan that it is, what the purpose is, right? Again, what that yield to maturity looks like. If there was funds control, what the monthly payment is. I mean, I won't get into too much of the detail, but just know that each loan has its own detailed view. This is sort of like a multiple listing service, but for loans. Okay? Note that if you'd like to dive into that much detail to actually see what type of assets that we lend against, right, we welcome you to do that, because we really believe, again, in that business model, and we think that you should too. Okay, moving down, I love the spatial map, right? So I currently have selected our active and completed mortgages. So we know we have 131, but if I wanted to see active and completed on the map, I would keep it the same. I'm curious currently only to know, based on our active mortgages, of which there's 89, that number changing daily with previous loans paying off and new loans being funded, and looking again at our map. Right, and this is a testament to the diversity that we as a management team bring to this business model. We don't have too many loans in any one state, right? And you see we have a very, very good spread across the country. We certainly have some strongholds, Tennessee, Florida, and Indiana being a couple of those states. But just know too that when you go ahead and click on these, if you wanted to see which loans were actually in those states at that time. Again, a lot of detail here for you to understand the type of assets that we're lending against and what our portfolio looks like in real time. Going a step further in talking about how we approach this in terms of diversity, we've also thought it was a good idea to show you the number of active borrowers that we have. So note that, again, out of 89 currently held mortgages, right, that is across 57 borrowers. And this is something that we do regularly in the fund as well as outside of the fund in our direct lending program. Most of the borrowers doing business with us are folks that are recurring borrowers. They're folks we've worked with before. They're small real estate brokerages and property managers and contractors around the country who have relationships with Marshall Reddick and the team here. So just on a pure average, it's like 1.5 per borrower, right? But that's not, it's not really an average. So our top borrower, our borrower with the most loans outstanding is 5. We actually have 2 borrowers with 5 of the 89 loans out. And then we have a couple at 4 and 3 and so on. But we're not lending to one-off random weekend warriors who, just set up their self-directed IRA and they're looking to buy a rental property with it, or they're a first-time flipper or a first-time new construction small developer. Those are not our borrowers, okay? Understand that we're working with professionals that are in the business of real estate and that have pre-existing relationships with Marshall Reddick. That's one of the main reasons, alongside of solid underwriting, that our default rate historically has been so low. I know I mentioned that the default rate with the fund is 0, okay? But Marshall Reddick's overall default rate over 11 years and about 2,100 mortgages funded to date is less than 2.5%. So it's a fantastic number, and we intend to keep it that way, regardless of fluctuations in the market, right? And that's not always easy to do, but we're able to do it. And this is a good segue into the next point I'd like to make, is it's all about loan to value, right? When you're lending money, you're evaluating risk. If I make that loan, am I going to get all of my interest and all of my principal back, right? And so you evaluate that risk heavily by determining how much am I willing to lend based on the value of the collateral asset. Because again, the fund only does first lien position secured lending. And so by secured means that we've got a first lien position in the collateral asset. And the only assets that we like and we lend against are residential real estate properties, right? We really love single family homes, but we're okay with small multifamily, duplex, fourplex, even, for the right deal, an apartment building up to say 15 or 20 units. That'd be a unique situation, and we would absolutely have to have a very favorable loan to value. But as you can see, right, our roll up or our aggregate loan to value currently is under 62%. And that's a fantastic number. That's a number that I'm very proud of, and a number that helps me, the team, and all of my capital partners sleep well at night, right? Because when it comes to, unknown economic times, which a lot of us know that we're in a really weird time right now, at the end of the day, when you're sitting at 60% LTV on your overall portfolio, I know that your money is safe. All right, so moving down, right, and a couple of other graphs here I want to kind of just browse through to help you understand what we're doing. So loan amounts, right, very diverse. Again, a couple over $1 million, a couple, as you come downwards. And so, very diversified. Property types, as I mentioned, we love single family homes, so that's where you're going to find the lion's share of the assets held. And then, of course, loan terms, right? Because we make both short-term loans and long-term loans. And we have a good mix of those as well. So we kind of give you the term of the loans and then break them down into the 4 main categories. And then, of course, lien position. I mentioned first lien. That's absolutely the only thing that we are willing to do, right? We've learned in the past that lending in junior position, no matter what the yield is just not worth it. And therefore we take that same capacity, that same understanding, that same structure into the fund, as we have the luxury of working with you folks and your hard-earned capital and your trusting of us to be good stewards of the money and to make sure that we're producing not only a healthy return, but a safe return. All right, keeping with the transparency, it's huge to us here at Marshall Reddick, our historical performance, right? So again, into our 5th operational quarter, and so we are going to continue to post each quarter the total investor capital. Again, this number here for April 1st, right, matches up here with this number. And then note that we have our total number of investors, right, substantially rising with each quarter that goes by, our distribution amount, and then of course our quarterly returns. The fund pays the dividend quarterly. So appreciate the time with you folks. I'm gonna turn it over here to Vince.
Awesome, so thanks so much for going over that, Pat. So what you guys see now is there's right under the return on investment tab, you're gonna see an invest now button. So I'll go ahead and ask Pat to go ahead and click that for me. So if you guys go ahead and click that, what that's going to do is you're going to see this is assuming this is putting Pat's information there, but what this would look like is this would be your information. And if you went ahead and submitted this inquiry, it would send a notification to Pat, Evan, and myself, and then this would go ahead and prompt us to give you guys a call. So this would be a good way for us to set up a consultation, maybe go on some go into more one-on-one conversations about how the fund works and so on. You're going to also notice at the top of the page, you're going to see that same button. So it's going to provide the same result as well. Now, right down below under the Invest Now button, you're going to see an Investor Login tab. Now, if you are already a Marshall Reddick investor, this will go ahead and take you to the Marshall Reddick Mortgage Fund portal. This is where you can go ahead and see all of your documentation, your investment, the returns, and so on. We're gonna actually go ahead and click on that button for me, Pat, and we're gonna take you into a portal. So this is actually Patrick's father's account, and I'll let Patrick go ahead and click, and we'll show you an inside scoop of what that looks like.
Yeah, absolutely. So again, right here from the fund page for existing investors, who already have a position in the fund, or those who are looking to get one in who would like to browse and see what the investor fund portal looks like, we're going to give you a little bit of a tour there. Now note that this software is hosted by Appfolio. I'm sure a lot of folks on the call are familiar with Appfolio, but they also have an investment fund management software. So we use them for not only our property management business, but also for our mortgage fund business. And so it's going to be a very similar type concept, username and password. And again, we're going to use my father's account, who holds a capital position in the mortgage fund, in order to show what that looks like. When you get logged in, right, you come to your dashboard here, and note that you've got several tabs here across the left-hand side of the screen. So we'll take a quick tour, right? On the tax form side, this is where we're going to be publishing your K-1. We'll also host the W-9 form that we asked you to fill out as a part of your investment subscription process. Document section wise, this is where we're going to post our quarterly memos along with the investor statements. And we also publish in this quarterly memo is going to be our financial statements. Again, we've talked about the transparency offered, and it doesn't really get any better than showing the assets that we hold in real time, as well as our actual profit and loss statement and our balance sheet. So just know that we're going to be publishing this type of information on that quarterly distribution memo, and those will historically be held inside the document section, along with your various other subscription documents when you became a partner in the capital fund. Distributions wise, this is just going to be a historical listing of those distributions, right? Again, they're quarterly, and would actually show the date the distribution was made and which quarter it corresponds to, along with the number, okay? And when you go ahead and click on the number over here, it's going to be able to break that down for you in terms of your preferred return and your upside, or what we call your profit sharing element. Okay, so my father was one of the original investors that helped us get this off the ground, and so you can see his quarterly distribution history. Now, he has opted to reinvest automatically those quarterly distributions, which is a very unique, very amazing opportunity that this fund offers, right? So much like a stock or a mutual fund, right, especially for self-directed retirement account partners, right? What do you do if you take the quarterly distribution? There's not a lot you can do with it inside of an IRA. So desiring to reinvest that distribution on the first day of the following quarter can help you take advantage of some compounding and really help you increase your yield. I mention that because then you'll see the same corresponding distributions here on the contributions tab for those folks who are automatically reinvesting. So an initial investment of 100,000 with all of these. So note that when the third quarter took over, right, that the return being earned here was going to be the 100,000 original plus the first distribution that he had, and it kind of rolls up and rolls up and rolls up to again help you take advantage of some of that compounding. Now, notice as well, for those folks who do not want to reinvest automatically the distributions, or maybe they want to take half of them in cash and reinvest half of them, we support a lot of that as well. Up here under the name or your login credential, you've got this My Profile. And when you go ahead and click on that, then you can see your investing entities, right? You might have multiple investing entities, right? Maybe a personal investment, maybe an IRA investment, maybe a family trust investment. They would all be shown separately. There's no commingling, but you'd be able to dive into each one of them. And here is where you'd be able to go ahead and edit and add in your banking credentials, right? Safe and secure, so that at the end of every quarter, we'll have those and we'll be able to automatically deposit those into your bank account of choice. So a basic, but simple, easy to understand investment fund portal where you'll be able to keep track of your investment, no matter how many positions, distributions, et cetera. The history is all going to be hosted here for you.
Awesome.
Yeah. All right. So moving along.
Awesome. Let's dive into the fund calculator. So for those that are visual learners like myself, let's plug some figures into the calculator to kind of determine the investment growth. So let's Pat, let's do 250 for initial investment.
All right.
And then let's say that you wanted to contribute an additional $1,000 a month.
So an additional contribution of $1,000 a month.
Mm-hmm.
Okay, and we're doing monthly.
Do it monthly, and let's say that you wanted to hold it for, let's say, 10 years.
Okay, so time invested is gonna be 10 years. Oh, fantastic. And in this case, they're opting for the reinvesting of the distributions, right? So taking advantage of the compounding that we talked about. So over that 10-year period, right, we're talking about a very reasonable return, right? Currently, we're exceeding the quarterly return of 2%, so we're being a little conservative on this calculator, right? But that 2% number, wow, Evan, that 731, I'd sure like to have that.
Absolutely.
10 years from now, or the same, forced savings plan, if you will. Do you have another example for me?
Yeah, let's do another one. Let's say that you wanted to put in 50,000 with no additional contributions, and you wanted to kind of just forget about it for 30 years.
Okay, so we're just gonna go 30 years, 50,000 investment. Are we gonna withdraw those or are we gonna keep them in?
We can do, let's keep it in, and let's do a worst case scenario, like a quarterly return of 1.75%.
And no additional contribution?
No additional contribution, yeah.
Okay. Wow, so a 50,000 investment that you just sort of forgot about, as long as we're hitting 1.75 a quarter, that rolls up to 7%. I think my math's correct, 7% annualized over a 30-year period. If you were reinvesting those distributions, you'd end up with a total amount of capital that includes all of your distributions reinvested in the compounding based on an initial investment over 30 years of almost 400.
Yep.
That's
So you
pretty
could print those out. You can email that to yourself just down at the bottom corner on the right-hand side. And it will show you different graphs and kind of just recap of, start date, end date, quarterly return, whether you want to opt in for reinvestment distributions or have a withdrawal quarterly. But we have that as a tool for you guys, so you guys can keep track of your growth.
Absolutely. I know my father, he likes to look at things on paper a lot of times. So, the computer is a good thing, but definitely having the ability to print this out, maybe take it to your financial advisor or somebody else that you'd like to discuss this investment with as a good viable option for you. We have that tool there for you to do so. Awesome. Thanks, Evan. Appreciate that. Some of the details as we sort of wrap up here before we get to our frequently asked questions, just some house cleaning items. So as far as the details go, certainly we have, as most funds do, a waterfall. And in this case, Marshall Reddick, as the manager of the fund, right? Because the fund doesn't have employees that run the day-to-day affairs of the fund. So like the three of us we work for Marshall Reddick, the entity, not for Marshall Reddick Mortgage Fund. So the fund, its largest expense is the asset management fee, and that's 2% of net assets under management, and that's paid monthly, right? So that will be the fund's largest expense, right? But then obviously we've got our 6% preferred return, and we've got our 50-50 profit share. I know we have some frequently asked questions about that. I think we're getting some good questions from the crowd, so we're going to dive into that. But a lot of times folks get lost in terms of the percentages and what those are based on and what that waterfall actually looks like. So I'm going to bring up just a super quick example of what the annual waterfall looks like. All right, so 15% fund gross, okay? That's a good solid number, but that's a very reasonable number based on our business plan. If the fund grosses a 15% annual return, right, we're talking annual, and that's based on the net assets under management. That's what that 15% is based on, okay? So You obviously, the fund has to pay its expenses. So operational expenses, we estimate to be about 1%. That doesn't include the staff cost. That's going to include things like loan servicing, bank fees, professional fees such as attorneys and CPAs and things of that nature. And then obviously our largest expense, single expense that we mentioned, is going to be the management fee paid to Marshall Reddick. Okay, so got to pay our fund expenses. That would leave us left with a fund net of 12%. Now, after expenses paid, the first expense that, or the first thing to be paid, right, is the investors, and that's your preferred return. That's a 6% annual preferred return. If you just divide that by 4, that's 1.5% per quarter. Okay, that's our 6% annualized return. So your 12%, take away the 6%, we'll be paying to the capital partners helping us conduct this business. That would leave us with a fund profit of 6% remaining. Okay, that's when we get into the profit sharing element, and that's how Marshall Reddick makes money, right? We don't make money on the management fee. That's just a pass through. That's just a covering the staff costs and the office rent and the utilities and that type of thing. But the fund profit, again, in our waterfall is a 50-50 profit split, right? So that's 3% to the capital investors based on their capital account, and then that's going to be 3% to management. Okay, so that's how management will make money. It will only be after the investors have earned their 6% annualized and when the remaining balance is split 50-50. So bottom line is that rolls up to a capital investor net of 9%, right, which is just your 6% preferred return plus your, in this scenario, profit sharing element of 3%, which is half of the 6.
Awesome. So Pat, one of the questions that I know maybe some of the folks on the call, on the webinar are probably thinking is, how do you earn a 15% by lending money at 6 to 12% interest, which is most of our loans? So I'll go ahead and let Evan go ahead and take a stab at that.
Simply, we're hitting at 15% by also charging a loan fee. So any loans that we originate, we are charging the borrower a 2% fee, which equates to that 15% fund gross.
Absolutely, right? We're lending, the actual interest rate on our loans vary depending on the loan type between 6 and 12% and every number in between that. But at the end of the day, as any lender would, private or conventional, the borrower of that loan pays a loan fee, right? Our loan fee is 2% of the loan amount. $100,000 loan would be a $2,000 loan fee. So for us, it's a velocity of money type situation, right? If my short-term loans, the average payoff time is about 5.5, 6 months. When that happens, right, I get that money back. I'm able to lend it again and earn another 2%. So again, the velocity of money helps me drive that fund gross yield up to that 15% number very reasonably, very safely, while lending at interest rates of 6 to 12%. So note in this annual waterfall example, this is exactly what we're doing right now, right? Because you notice that we've got a 9% net to the investor, right? I'm going to jump back to our site here, and you can see that over the last 4 quarters, we're rolling up an annualized return of that 9%, which again is going to be a quarterly distribution. That's an average of 2.25% per quarter, okay? So just so everybody knows, we're talking real numbers, reasonable numbers.
And Pat, just to piggyback on that, the difference between the mortgage fund and maybe some of our direct partners is that the mortgage fund is actually able to obtain that 2%, whereas when in the direct lending capacity, that is actually not given to the lenders, right? That is something that Marshall Reddick would take, correct?
Absolutely. The direct lending model, different than the fund model, the 1-to-1 investor to loan ratio, right? So we have one lender on one loan, that person's actually on the loan documents. That capital partner doing that deal earns 100% of the interest paid on the loan and takes on 100% of the risk of investing in that loan, okay? And in that scenario, Marshall Reddick, not the fund, helps arrange that loan. And so the loan fee paid by the borrower, still the same 2%, is paid to Marshall Reddick, right? So in the direct lending model, the Marshall Reddick earns the loan fee and the capital partner earns the interest. Whereas you compare that to the model in the fund, we're in essence sharing with the capital investors, the capital partners in the fund, a piece of every loan fee, because the fund not only earns 100% of the interest on each loan, but 100% of the loan fee generated on each loan.
Awesome. Yeah, that makes a lot of sense. Okay, well, it looks like we're going to dive into some of our frequently asked questions. We got some good questions here from the crowd, and then some ones that we definitely hear quite often. So I'm going to go ahead and start us off here. So first question is, I'm interested. How do I get started?
Yeah, perfect. So first thing you need to do, gain access to the investment fund portal. Schedule time with Vince, myself, or even Pat if you have any questions. And then lastly, get through accreditation. Either have your CPA or your financial advisor opt in to give you guys vouching a accreditation letter. But more or less, if you have questions, reach out to us. We're happy to get you guys up and going.
Awesome. Okay, second question coming in. So the question is, I understand the distributions are quarterly. What are the quarter end dates? So this is a great question. So we follow standard quarter end dates. So 3/31, 6/30, 9/30, December 31st. So we follow those standard dates, although the follow-up to that question is how long after the quarter end will the distributions be paid out to the investors? So this is also a really good question. So according to our paperwork, we have about 30 days to pay out the distributions, although I can tell you as of the last 5 quarters, we've been getting this contribution paid out within at least 2 weeks. So prep for 30 days, but in reality, we've been getting that out much sooner as of recent. Another question that we get often is how much capital has been raised so far?
We are at, to date, 12.25 million. This includes funds on deposits in our subscription account.
Yeah, thanks, Evan. Appreciate you sharing that. 12.25 million to date. And I know there's some folks that are saying, the website here only says that it's 7.62. Understand that, remember that these two metrics, the return and the total investor capital, are going to be updated on this site only once per quarter, and that'll be the first day of the new quarter, right? So we've had a fantastic start to the second quarter in terms of the capital raise, right? And the 12.25 includes dollars in the subscription account, which is sort of like the waiting room. I know we've got a question on that and we're going to get to that, but know that the 7.62 is not a real-time number and it does not include dollars in that waiting room, that subscription account. Okay, so know that we do have a total of 12.25 as of April 28th at 7:15.
Awesome. Okay, next question we have is, what is an accredited investor? And I'll let Pat go ahead and take that one.
Yeah, and that's really one of the most frequently asked questions. It's so much frequently asked question that we have it actually on the website here. We'll be updating this periodically as that happens. An accredited investor is not something that you can become. I mean, I guess it is, but it's not like you take a course and then all of a sudden you understand this investment, therefore you can make this investment. The term accredited investor is a government term, and basically they want you in their eyes to be a high income earner or have a high net worth, right? So simply you need 200,000 as an individual, 300,000 as a married couple in each of the last 2 years. And of course, we have to actually document that. We don't just take your word for it. Unfortunately, in the 506C type Regulation D fund, we've got the SEC, asking us and giving us the responsibility of actually seeing that. So we can see W-2s, tax returns, K-1s, 1099s, that type of thing to verify you as an accredited investor from an income standpoint. The other option is going to be for net worth, right? And so net worth is excluding your primary residence, but including just about every other asset that you could have. vehicle equity, rental property equity, mortgage loans that you have done directly with Marshall Reddick, bank accounts, brokerage accounts, 401ks. So it's not that difficult actually to get to the net worth of greater than 1 million, but understand that it is a hard stop. You must be an accredited investor in order to invest in Marshall Reddick Mortgage Fund. And I find that some of our capital partners actually think it's sort of a unique and a fun exercise to actually take an inventory of what their assets are and actually put it on paper and be like, wow, that's more than I thought.
Absolutely. Absolutely.
Yeah. Now, note that you don't always have to actually show us. There is an easier option. For those folks on the call and watching this in recording fashion, understand that if you have a trusted professional, and when I say professional, I'm talking about a CPA, I'm talking about an attorney, or I'm talking about a financial advisor. Somebody like that who can vouch for you, that knows your financial position so well and is willing to sign a letter and take the responsibility for verifying you as an accredited investor, we can accept that without having to look at any of your documentation, income, net worth, etc. That's by far and away the easiest way to qualify if you have that professional relationship with someone like that who can provide you that documentation.
Awesome. Okay, next question is, how is the income taxed? So I'll go ahead and take that question. So this is a California LLC, and you'll be sent a K-1 at the end of the year. Okay, so you'll be having a K-1 from us. Now keep in mind something really important. As a California LLC, non-residents of California will need to file a return in California. So something to be made aware of as you are, come tax time and you have your documentation. Of course, it's always good to consult with a CPA regarding how this is done, but definitely wanted to put that disclaimer out there.
Yeah, I also want to take that a step further. The fund will do business in a number of other states, okay? But currently, with regard to those other states, we're filing and paying the tax at the entity level. Therefore, the K-1 that's passed through to the partners will not put the responsibility to you of filing in any other state in which the fund does business. So the capital partners currently will be required to file, of course, with the feds, but also with the state of California, but not in any other state in which the fund does business.
Awesome, thanks for clarifying that, Pat. Next question, can I invest using retirement funds?
Yes, but of course, consult your tax professional and also consider the possibility of UBIT.
Yeah, UBIT, unrelated business income tax, right? We don't have that currently, but it's certainly possible, right? None of us on the call are tax professionals. We encourage you always, when undertaking any type of investment, to speak to your tax professional and get some advice from that front, right? So we have a lot of folks using self-directed retirement accounts to invest in the fund, and I think that's an excellent vehicle to use to invest in Marshall Reddick Mortgage Fund. But definitely do your due diligence and do yourself a favor and speak to your tax professional before investing.
Awesome. Next, how does Marshall Reddick profit from the Marshall Reddick Mortgage Fund?
Fantastic question. We sort of went over this previously. And the idea is that Marshall Reddick collects from Marshall Reddick Mortgage Fund in two capacities. So I like to always get that asset management fee out in the open. So I'm going to start there. We talked about the 2% asset management fee that's received by Marshall Reddick from the fund. That, again, is not a profit center. That just simply allows Marshall Reddick to manage the affairs of the fund. But the actual question of how does Marshall Reddick make money, a very valid question, and one that should be asked by any investor of the service provider they're considering investing with. We earn a share of the profits earned on your capital, okay? But don't forget that profit share and our profit, our income, Marshall Reddick's profit and income, comes only after you've received an annualized 6%. So we've got to pay you first, which is how it should be, before we pay ourselves. And it really incentivizes us. It's a good structure for us to be able to push a good, hard, safe yield.
Got it. So next question is one that we get fairly often and I think is important to cover. When the investment paperwork is complete and I have deposited funds with Marshall Reddick Mortgage Fund, when do I start earning returns? And I'll let Pat go ahead and take this one.
It's also a good question, right? I mean, it's like you make an investment, do you start earning right away? And the answer to that is no, okay? In order to avoid cash drag and dilution of investors who have invested previous to your entry date, your funds initially are deposited into a call account, right? That we call that specifically the subscription account. And so you're not there for a long time, right? It is sort of the waiting room, and it's a first in, first out scenario. So there's definitely a queue, but we're currently running in that waiting room roughly 30 days, right? And that's a good thing, right? If you invest, you don't want your returns in that quarter diluted by those folks coming in right after you, right? You'd like to get them in, but do know that once your funds are moved from the subscription account to the operating account, which means they're immediately deployed into an investment, you immediately from that date of transfer start earning your pro rata share of preferred return and profit. Okay, and note that that waiting room only occurs on the front end of each contribution, not dividend reinvestments, but each contribution. So for example, I put in 100,000, right? I deposited subscription account. I had roughly 30 days before I moved up in the queue. My funds are deployed. Once they're deployed, that 100,000 is always earning. There's never a waiting game again, which is one of the major downfalls to the direct lending program. You're going to be earning your pro rata share, preferred return, and profit share until some point in time in the future when you decide that you'd like to get your money back or some portion of it and you call for cash out of your investment.
Got it. And Pat, just to clarify, that date when funds are sent over to the operating account, that is labeled on the fund portal as well, correct?
Yeah, absolutely. If I can dive back here to inside the fund portal, we go to the contributions. So you can see down here this initial contribution of 100,000. So this was deposited into the subscription account on 4/14, and there was actually a pretty short waiting period in this case. They were moved on 4/23 and then deployed.
Perfect.
But from 4/23 to the quarter end, that would have been the period of time that this investment was earning the pro rata share preferred return and profit. But then you roll to the next quarter, right? You're invested for the whole 90 or 91 or 92 days in that quarter.
Got it. Makes sense. Thanks for pointing that out. Okay, next question. I already own an investment position and I would like an additional investment. What is that process? And I'll let Pat go ahead and take this one as well.
Yeah, so we definitely have a lot of folks looking to, test the waters, right? We have a minimum investment of 25,000, a very reasonable number, but our pure average right now is 100,000. That's our average across our capital partners. So let's see, you want to test the waters, right? See if you're comfortable with the fund. So maybe you decide to invest 50,000. And then, you collect 2, 3, 4 quarters of quarterly distributions, and you're feeling more comfortable, you want to put in another 50 or another 150 or whatever it is that you're comfortable investing. So the process to reinvest is very simple, right? We've already verified you as an accredited investor. We may have to re-verify depending on how far down the line. If it's 10 years and you decide to put more money in, it's a little different ball game. But nonetheless, the paperwork is very easy. There's just one subscription agreement, which is the same documentation you have to put in for every investment, every contribution. And do note, however, that each new contribution, each new capital investment goes into that subscription account and goes through that same first in, first out waiting period, and also runs its own minimum hold, which I'm realizing that, obviously we've got it in the investor requirements here on the website, but there is a minimum hold. Each contribution must run 12 months from acceptance, and the acceptance date is the date moved from subscription to operating account. So again, in my scenario, I invested 50 and then I'm going to invest another 50. My second 50 is going to run through that subscription to operating, and then it's got its own 12-month horizon.
Awesome. Well, thanks for covering those questions. So That pretty much wraps up the amount of questions that we're going to be able to take this evening. Now, moving forward, you're going to be getting follow-up calls from Evan and myself. We'd like to set up consultations, go over maybe more direct questions for you folks. You can expect those calls within the next day or two. You'll also have our contact information. We may have left some voicemails to you. You're going to also get a recording of this, so feel free to reach out through the Invest Now tab if you know you want to get started right away. Otherwise, I look forward to reaching out to you folks this week.
All righty, everyone. Thank you so much. Thanks for attending.
Absolutely appreciate everybody's time. I apologize for any of those other questions that we weren't able to get to. I'm sure that we'll answer those directly in our one-on-one consultations, and we look forward to speaking with you. Bye-bye now.